If you want to make $1,000,000 in a year, I'm not talking about being worth $1,000,000 or having an investment portfolio worth $1,000,000. I mean actually earning $1,000,000 in a year. There's three things that you're going to have to get really good at. Number one is you're going to have to be really good at creating a revenue source that's scalable. Number two is having the right mindset, and I'm not talking about just believing that you can do it. And number three is knowing how to do resource allocation. The reason why you're going to have to get really good at creating your own scalable revenue source is because unless you are a Fortune 500 CEO, you're not going to be able to make $1,000,000 a year from your job. You're going to have to create your own income, meaning you're going to have to create your own product or have a service that you can scale to $1,000,000 a year or more. If you own a local clothing store and logistically you can only sell $1,000 worth of clothing in your store a day, you are never going to be able to hit $1,000,000 in a year. Then when it comes to the mindset side of things, if you want to go to $1,000,000 a year, you can't just think and believe that you're going to do it. You're going to have to actually understand the numbers and make sure that your actions are aligning with reality. It's a different type of mindset that you have to understand because the numbers show us that it is difficult for a business to make $1,000,000 a year. It's actually not probable that a business is going to make $1,000,000 a year, so you're going to have to accordingly and do things that the majority of businesses are not doing. 80% of businesses fail within the first 5 years of starting. Now, out of those 20 businesses that succeed, only 9% of businesses are making $1,000,000 a year of revenue or more. That's not profit, that's revenue. Now, out of the 9% of businesses that are generating $1,000,000 a year of revenue or more, I would say that probably 10% of those are making $1,000,000 a year of profit. So if we diagram this out, you have 1,000 different business ideas, people who start a business. Well, right off of the bat, 800 of them are going to fail within the first 5 years. 200 of them are going to continue to succeed and continue to thrive or grow over the period of whatever. They're going to continue to grow. Out of these 200 businesses, only about 9% are going to generate $1,000,000 a year of revenue. So that's 18 companies that are generating $1,000,000 of revenue a year. Now, if 10% of these companies are making $1,000,000 of profit a year, that's 1.8 companies out of 1,000 business ideas, business companies that will actually make $1,000,000 a year. To put that in perspective, you are going to have to be in the top 0.1% to the top 0.2% in your industry, in your business, as a realtor, as a service provider, if you want to make $1,000,000 a year or more, which means if you are doing what the other 99.9% of people, businesses, other entrepreneurs are doing, well, you're going to end up like the other 99.9% of people. You're going to have to do now what the 0.1% or the 0.2% of people are doing if you want to actually now become successful enough to make $1,000,000 a year or more. This doesn't mean that you have to be smarter than the other 99.9% of people. This doesn't necessarily mean that you have to work harder than the other 99.9% of people, although working harder is not going to hurt you, and there's definitely a place where you need to be working harder, but I'll talk about that in just a minute. And this doesn't mean, thankfully, that you have to be better looking than the other 99.9% of people. How are you doing? This means that you have to know how to provide better value to your customers than the other 99.9% of people. And thankfully, it's much easier to do that than to be a better, smarter, harder worker than everybody else. Now, I'm going to talk about how you can provide this value in just a second, but let me finish up this point about mindset, because the last thing that you have to understand about making $1,000,000 regarding your mindset is that if you are going to be one of the people that are making the $1,000,000 a year or more, well, that means people are going to know about you. That means people are going to know that you're making money, and people are going to know that you're succeeding, and that is going to mean that people will hate you for it. And people will hate you so much that they will try to bring you down. Not because they feel like you're doing something bad, I mean maybe they do, but really because they're jealous. They see you succeeding and they're going to want to pull you down, whether it's with words, whether it's with actions. And this is one of those things where you're going to have to understand that people will hate you for everything that you do because you are trying to succeed. Now, this doesn't mean everyone's going to hate you, but the more successful you become, the more haters that you're going to have. And it doesn't matter what you do or what you offer or what price you offer your service, because many times now people will start to change what they do or how they offer things based off of criticism or based off of the haters. But the reality is, it doesn't matter if you're offering something free or for $100,000. People are going to hate you because you are successful, not because of the product that you're offering. I'll give you an example. Here on YouTube, guess what? I make videos talking about money, entrepreneurship, and financial education. And guess what? People hate me for it. I have received death threats from people. Now, the death threats aren't really for me talking about financial education. The death threats are more for the way I look, because people say, oh, your people bombed my country, so I'm going to come and kill you one day. But they're kind of confused about a lot of different things there. And then you have the people that are going to spend hours going on video after video after video talking about, man, all this guy does is make money, but talking about money. Yes, I do. And then you have the people that are trying to create content based off of what other people do wrong. Any YouTuber or social media person who has over, I would say, 500,000 subscribers has definitely dealt with this, where people are always watching every little thing that you do, and as soon as you say something wrong, do something wrong, or even that they think is wrong, or they might disagree with you, then they're going to immediately start creating content saying Jaspreet is wrong, or this person is wrong, they have no idea what they're talking about, and go on and on and on. That way they can try to leverage your name and hopefully get some views or clicks or whatever based off of your name. Now, you might be thinking, but Jaspreet, I don't really want to create content. I don't want to make YouTube videos or Instagram videos or podcasts. I want to build a business. What if I just offer my product for free or something like that? Well, I have a company, Briefs Media, and what we do is we have free newsletters. We have one newsletter catered towards investors called Market Briefs, and then we have one newsletter for entrepreneurs, business owners, founders called Business Briefs, and it's a daily breakdown of things that are happening in the markets. The Business Briefs one goes over innovation and trends and things that you need to know as a business owner, that way you can run your business better. Market Briefs covers things that you need to know as an investor so you can invest your money better. Both of these newsletters are completely free. The way that we make money is we have advertisements in the newsletter. That way we can keep our product free. And guess what? Me and my team get comments and emails from people saying, how can you dare sell advertisements into a newsletter that you send me? You should be offering this value for free without trying to sell our information or without trying to do this, when we're not selling information. We're just putting an advertisement in the newsletter. And if we didn't put an advertisement in the newsletter, then we'd be charging you $20, $30, $40, $50 a month, because we have a ton of time and effort, energy, and people working on the newsletters to put the newsletter together. I mean, if it was free and I don't have to pay any money to do it, then sure, maybe we didn't need advertising, but you have to pay money to create a product and scale it. And we've been able to grow our newsletters to a very large, massive publication. But you're going to have people like this. Not everybody is like this. But this is one of those things where you have to understand that no matter what you offer, even if it's free, people will hate you for that. And this mindset is what's going to hold so many people back, because you can't stand the criticism. You don't want to see the criticism. You want to make people happy. I mean, it's human nature not to want to make people upset. But the reality is people are going to be upset no matter what you do. It doesn't matter what you sell. It doesn't matter if you're not even selling anything. People will still be upset with whatever you say, however you say it, the way you look, whatever you offer. And this single thing holds so many people back from becoming successful or achieving higher levels of success, because now you're always trying to change what you do based off of what people say or what you think people want, when in reality, sometimes you just got to worry about you got to worry about your team, and you got to worry about producing the best value possible and ignore everything else. Let everybody talk, let everybody complain, let everybody say what they want, and you focus on just servicing your customers. Focus on servicing your company, focus on servicing your team and providing the best value possible, and let everybody else continue to complain and make noise. If you can do that, and the reality is only 0.1 to 0.2% of people can do that, but if you can build the mindset to do that, well, then you will have the mindset to actually become successful, because you're going to have to ignore the noise. Now, you don't want everybody hating you, and you should pay attention to what people are saying, because if they're saying something that has a basis or merit, then you want to pay attention to that. But you're always going to have haters. You're always going to have critics. You're always going to have people trying to bring you down. But this is where you got to understand what is valid and what's just people complaining because they have nothing better to do in their lives. And there's a lot of broke people who have nothing better to do in their lives but try to bring you down. And this is where you also have to understand that if somebody's trying to bring you down, then they're already below you. Like, no successful person who's more successful than you has the time to sit there and criticize you and put you down and complain about all the little things that they're doing. What they're doing is they're working to sell their product. They're working to grow their revenue. They're working to scale their revenue. They're working to grow their profits. They're working to grow their team. They're working to get more customers. So if you want to be one of those people, you're going to have to be able to put this out. And again, it's difficult. It might sound easy, but then once you start getting those comments, you start getting those emails, you start getting these complaints from whatever you're doing, whether you're selling something for free or whether you're selling something for $100,000, people will always complain and people will always be unhappy. But you got to service the people who are your customers, service the people within your company, service your own team. That way you can provide the best value to the people who are a right fit for your product. Now, I do want to give you one caveat here, which isn't required in business, but it's something that's very important to me, which is selling ethically. Because I don't want to sell something to somebody who shouldn't buy it. That's just the way that I operate. Now, I understand, not everybody works that way. Some people are trying to get as many dollars as possible. They're trying to milk every client as possible. They're trying to sell everything as much as they can, even if the person doesn't need it, even if the person shouldn't buy it. And for me, that's just not interesting. What I would say is focus on building a business that's ethical, that has a product that should be sold to people and you have the right people buying it. And then instead of focusing on selling a product to the wrong people, focus on just growing the business. Focus on growing the customer base, because if you focus on the value first, well, then you're going to have enough leads where you're not going to need to try to sell it to people who don't need it. Like even in my paid products, like my coaching, I'm actively working to weed out people that shouldn't buy it, because I don't want somebody who's not going to use it, who's not going to benefit from it, who shouldn't be buying it, who can't afford it to be buying the programs that I'm offering. And what I say is, look, if you can't afford it or if you shouldn't buy it, watch my YouTube videos. If you can afford something, then go out and pay something that's $27 a month. If you can afford more, then you do more. But you have to be willing to build an ethical business if you want to really be able to build a scalable business that's going to last for a long time. Because sure, you can try to milk everybody today, make as much money today, but over time, people will catch on and people will start to lose trust in you. And I would rather work on growing the size of the pie, focus on growing the number of leads, growing the number of customers, and having a smaller percentage of people buying, but it's a larger number of people because the whole pie is larger, instead of trying to force more and more people to buy who shouldn't be buying. Now, if you are a business owner and you want to join Business Briefs, which is my free business newsletter for entrepreneurs, and you want to stay up to date on what's happening in the business economy and innovation and funding, the newsletter is completely free. I'll put the link to how you can join Business Briefs down in the description below. Now, once you prime your mind to understanding some of the things that you're going to have to go through if you want to actually achieve the $1 million a year and you want to continue with that, now we can go back a little bit and understand, what does it mean to have a scalable product? Well, if, going back to the boutique example, if you have a local store and you can only make $1,000 a day because of the logistics of your store, well, then you're not going to be able to make $1 million a year. If you are a dog walker and the most amount of money you can make is $600 a day if you work all day, you're not going to be able to make $1 million unless now you start developing operations and a team. But if you really want to build something scalable and avoid all the stress and all the potential headache, then you can start to look for something where you have a disproportionate difference between your revenue and your expenses, where now your expenses will grow as you grow, which is natural in any business, but you want your revenue to be able to grow disproportionately faster than your expenses. This is what you want your expenses and your revenue to look like. Where in the beginning, sure, you're going to have high expenses. You got to operate the business. You got to figure out how to get the business started. You got to have the support and everything to run the business. And you might not be making much revenue in the beginning. But as time goes on, as you can start making more money, you want to create a differentiation where now your revenue, this blue line, the revenue can grow significantly faster than your expenses. So as you make more money, well, you can make even bigger profits because your expenses aren't growing as fast as your revenue. Back after college, I started this real estate company. It was a real estate wholesaling company, and I was still new in entrepreneurship and the whole business idea, and I started making good money. But one of the things that I realized was I was going to be capped at somewhere between $40,000 to $60,000 a month from this company based off of the supply, the amount of homes that I could wholesale in my area, and the amount of time that I would have to put in, and the amount of effort. Now, maybe I was a little bit naive back then where I didn't really fully understand market potential and how to build a team and all of that. But for me, I felt like I was capped because it didn't seem scalable to me. There was a limit to what I could do. And there was a limit to the amount of hours I could put in, and there was a limit to how much money that I could make. And because of that, I stopped doing that business. But that's when I started really thinking about the scalable idea. Now, the internet has made this scalable possibility so much easier and so much simpler than before, because if you had a physical product, well, it was very hard to scale, because you would have to open up more stores, or you'd have to keep paying for more and more products to get it into your wholesalers, and then you'd have to wait to get paid, and you had all these logistical issues. But now you can open up something on the internet, you have way lower costs to get started, and now you can keep your costs lower while your revenue can scale to pretty much infinity, because there's no limit to how many people can buy a product on your online store, but there's a limit to how many people can buy a product at your physical store. At your physical store, you can only sell as many products as cashiers as you have at one time. On your online store, there's really no limit. Yeah, maybe you have to pay a little bit more money to handle the servers for more customers and more purchases, but you're going to be able to make way more money. Let me give you another personal example. Let me talk about Briefs Media, which is the company that I actively run. So Briefs Media is a newsletter company. The way it works is we have a content team that works to write newsletters, and then we have an ad team and a business development team that works to get advertisements, that produce the advertisements, and then we put this in the newsletter, and then this gets sent out through our newsletter software. So the more readers we have to pay, the higher our cost is, because our servers are going to cost more money, and then we have to still produce the same newsletter. But sending the newsletter to, say, 5,000 people versus 100,000 people isn't that big of a cost difference, but the revenue potential is significantly more. Sure, maybe now we have to staff more people, we have to have a better business development team, that way now we can service our readers better, but marginally, our costs are going up, but our revenue can scale significantly faster. Same thing from 100,000 to 200,000 readers. Yeah, our costs might go up a little bit, but our revenue potential just doubled. And this is where now understanding that you can create a bigger and bigger gap if you have a company where now your revenue can scale faster than your expenses. And this is now where we go into the third thing that I talked about, which is revenue allocation. Because if you can build a company where you have this disproportionate growth between your revenue and your expenses, well, now you can have more and more margin. This is your margin. This margin is what's going to allow you to then scale to the $1 million mark or more, because now it's all about what do you do with this cash? What are you going to do with this money to help you get to wherever you want to go? Because what happens to so many people is they start seeing this type of growth. Maybe you made $100,000 worth of revenue and your expenses are $40,000. So you have $60,000 worth of margin, and people will say, whoa, 60 grand, let me take 40 grand for myself, or maybe all 60 grand, let me go get myself a new car, let me go on a nice vacation, let me start going to these nicer restaurants. But now your business is going to continue to grow at a slow and steady state because you don't have anything fueling the business. The other side is you have the $60,000 worth of margin, and now you take all 60 grand and you put it back into the business. That way you can accelerate the growth. You're putting fuel on the fire. You're running more advertisements. You're hiring more people. You're investing in more growth. That way now you can take your revenue higher while marginally increasing your expenses. You're taking this money, putting it here. That way you can increase your expenses. That way you can grow your revenue. Now, sometimes you're going to make mistakes. Sometimes you're going to do things wrong. But once you figure it out, you're going to be able to take this money, use it to increase your expenses. That way now you can disproportionately increase your revenue. If your mindset didn't hold you back from hitting that $1 million a year mark, this is the next place that holds back so many entrepreneurs from hitting the next revenue threshold or that profit threshold, because now you get excited by the cash you have in the bank, and instead of reinvesting it in the business, you start going out and buying nice cars, you start living big and having this nice stuff. That way now you can start enjoying the fruits of your labor. And there's nothing wrong with that. You just have to be honest with yourself and understand, where do you want to go? Like for me, the first time my company made $1 million in a year, I took home about $20,000. I made less than every single one of the employees in my company, and I had a worse car than every single one of the employees in my company. Why? Because I was focused on this. I was focusing on putting every dollar I could back into the business, right? The resource allocation. I was putting every dollar I could back into the business. That way we can scale the costs, but also scale the revenue faster. It's a sacrifice because now you see the cash and you're putting it back in, and it's a risk because there's a chance your business can fail. There's a chance you're going to make a dumb decision. I have made bad decisions with my money. I have made bad investments, but that's how you learn. It's a part of real life tuition, because most of us, myself included, never had any sort of business education. No one told me how to start a business, how to build a business, how to manage my money, how to do all this stuff. You have to learn as you go. And those mistakes are expensive. But those mistakes also teach you how to do it right. And this is where you have to make that decision for yourself. How are you going to start allocating that resource of your cash? The second resource you have is your time. And we talked a little bit earlier about working hard and how just because you work harder doesn't necessarily mean you're going to make more money. But this is where you have to understand now how you're going to allocate your time, because there's two resources that you can use to help grow your business, to help grow your revenue, to help grow whatever it is that you're trying to do. It's cash and time. Now, the more cash you invest back into the business should, in theory, help you grow. Unless you're putting the cash somewhere bad, unless you have that disease of too much money where you're just throwing money at problems without actually trying to fix them. I'm assuming now that you're using your cash in a good way to actually help scale your business. If that's the case, your cash will help you grow bigger, faster. Now, when it comes to your time, it works the same way. What are you doing with your time? Are you learning about business? Are you taking classes? You're hiring coaches? You're going through consulting? You're spending time learning about how to grow? Or are you spending more and more time watching Netflix, going golfing, doing a bunch of dumb things like trying to figure out the best office furniture? This is one of those things, oh my goodness, really frustrates me with smaller entrepreneurs, where you spend all your time, I want to start a YouTube channel, and now you're spending all this time trying to figure out the best camera, the best lighting equipment, should I get a studio? And now you want to invest thousands of dollars and hours and hours and hours of your time, if not days, if not weeks of your time, trying to find all the bells and whistles, when the thing that's the most important is the content that you put out. The thing that's most important is the product that you put out. The thing that's most important is the sales. It's not the website. It's not the logo. It's not the color that you have. You can worry about all that stuff later. Worry about that after you hit $1 million. But up until you get there, all you got to worry about is getting that $1 million. Forget what furniture you have. Forget what equipment you have. Forget about all that other stuff. First, hit that $1 million. And now, take a little bit of time. Now take a little bit of the cash and invest in a nicer office. Get some nicer furniture. Get some nice branding and design work done. That way now you can start to look a little bit more professional. But the first thing that you have to do, the first thing you want to be putting your time and focus on is this. Not the color of your furniture, not the color of your website, not all that other stuff that people spend all this time on. Because that's just distracting you and holding you back from actually generating the revenue. First, make the money. First, make the revenue, and then start reinvesting back into it. That way you can grow faster. There's 3 questions you need to ask yourself before you can build a 6 or 7 figure business. First, you got to know exactly how do you make money? What is your product? Second, will this product be needed in 5 years or 10 years or 15 years? And third, can you sell a whole lot of this product? Is it scalable? Once you know what your scalable product is, now let's talk about 2, growth. The reason I want you to know your product so well is so you can determine your LTV, the lifetime value of your customers. Look, if you have a business and this is your product that you sell and you make $100 every time you sell this product, then the only way you can make more money is if you have more customers buying this product. And the most amount of money that you can spend on marketing or getting a customer at this point is $100, because the lifetime value of a customer is $100. But let's say now you have 5 different products and each one of these 5 products make you $100. So anytime somebody buys one of your 5 products, you make $100. And now let's assume that for every customer that buys one product, there's a 50% chance they're gonna buy a second product, a 40% chance they're gonna buy a third product, a 30% chance they'll buy the 4th product, and a 10% chance that they're gonna buy all 5. Now, your lifetime value of a customer isn't just $100, because many customers are buying more than one product. Now, your lifetime value for a customer is $230. That means you can spend up to $230 to acquire a customer here, versus here, you can only spend up to $100 to acquire a customer. Now you need to be reinvesting in growth. Use this money that you're making to reinvest, to acquire more customers and create new products, because that can create a bigger lifetime value and that can also get you more customers into your business. This is where you need to know what your business's goals are. That way you're reinvesting into your business in a way that's going to align with your goals, which brings me to 3. Know your goals. If your goal is to build a business that's going to get acquired or bought out by another company, or you want to go public, then you're going to run your business in a way that's different than if you want to build a business that you're going to run and have for the rest of your life. If your goal is to get bought out or acquired, then it's all about speed, because now you want to get customers and users as fast as possible. That way you can go to a bigger company and say, hey, we have 1 million active users and you can buy our company for $100 million. If that's your goal and your customer is making you, let's say, $100, then you might even be willing to pay $200 to get a customer that's worth $100, because your goal isn't to make a profit right now. Your goal is to get bought out and to get one big paycheck at the end, so you're going to do whatever it takes to get these customers as fast as you can. The way you make up for that loss is you have to invest your own money into the business, or you can use someone else's money through venture capital or angel capital, or you can go and get debt. If your goal is to build a sustainable business that you can keep forever, that you could potentially pass on from generation to generation, then you're not going to be paying $200 to get a $100 customer, because you're going to run out of money eventually. Your goal isn't to get a big paycheck one day when you sell your business. Your goal is to see a profit every year. When a business is profitable, that means at the end of the year, they're going to have extra cash in their bank account that's left over after paying all their expenses. You, as the owner of the business, are now entitled to this cash, this profit, because you are the owner of the business. I'm going to be talking more about this in just a minute, but if your goal is to build this long-term business, then you want to see this profit every year. That way you can take out sustainable profit checks as the owner. If your goal is to sell your company to somebody else, then it's all about speed. Get as many customers and users as you can. That way you can sell this company to somebody else for a big paycheck. If your goal is a long-term sustainable business, then your goal is to build a profit and have a profit every year. That way you can take out this distribution every year. The way to successfully do either of these is you need to know how to manage your cash. If you really want to get to the 7-figure business mark, then you need to know how to manage your business's cash. That way you have cash to reinvest into your business and grow. So let me give you an example. Let's say your business does $500,000 in revenue, and then you have to pay your costs, right? So let's say you have $175,000 of cost to run your business. So it's your advertising, your marketing, your rent, whatever. All your costs to run a business are $175,000, and you're paying yourself a small salary of just $25,000. So that leaves you with something, what is that, $300,000 in your business's bank account as profit at the end of the year. And now you, as the business owner, have a few options of what you can do with this $300,000 of profit. You can take all $300,000 that you have as profit and pull it out into your personal bank account. That way you can start living large and live a better life, because you're only paying yourself a $25,000 a year salary, but your business has a $300,000 profit. So you can take all $300,000 out and start living a better life, but then your business is not going to have any extra cash to reinvest into its business. You could take out $100,000 for yourself as a profit distribution, and then leave $200,000 in the business as some savings cash and some money that you can use to reinvest in the business. That way next year, maybe instead of $500,000, you can aim for $1 million or $1.5 million. Or you can take out a distribution of $0 and leave all this cash in the business. That way you have cash for savings and you have cash to reinvest in the business to grow bigger. But there's a risk involved, because you're essentially taking $300,000 of money that's yours, because you, as the owner, the 100% owner of this business, are entitled to all the profits. So you're essentially taking all this $300,000 and reinvesting it into your business while only living off of a $25,000 salary. The good news is nobody's going to care about your money the way you do, and if you're reinvesting this money back into your business, chances are, hopefully, you're going to do whatever you can to grow this money that you're putting in the business. So if you believe in yourself and you believe in your product, you should feel comfortable reinvesting this money back in your business. But this creates a little bit of a dilemma. When is it okay to pull money out of the business? Because every dollar you take out as profit is a dollar your business doesn't have to reinvest into growth. Your business is making good money and it's making a healthy profit, and on paper it looks like you're making a ton of money because you have this $25,000 salary and this $300,000 profit in the business that you're making. But there's a dilemma here, because every time you pull money out, you pull this profit out, your business grows slower because your business has less cash that it can use. But if you don't pull any money out, then you're still living off of a very small salary, even though your business that you own is making a ton of money. It becomes even more confusing when you factor in taxes, and I'm going to get to that in just a minute. But this is really up to you and how big you want to grow and how fast you want to grow as a business. If you want to start pulling out this profit and you're happy with this $500,000 revenue, that's fine. If you want to get to the $2, $3, $4 million revenue mark, then you got to keep this money in the business and reinvest it and keep taking that risk and trying to grow the business as fast as you can. That way you can reinvest this cash to grow the top line revenue. That way you can get a bigger bottom line profit. When it comes to managing your business's cash, it helps when you use a bank that specializes in startups and freelancers and small businesses like our sponsor North One. North One is the next generation for business banking because you never have to step foot into another physical bank again, because North One lets you manage your business finances right off of your phone. You can save money on bookkeeping because North One gives you insights on your business's cash flow and revenue and expenses. You get unlimited payments and deposits, and North One lets you manage your entire team's finances. The cool thing about North One is that they let you create different sub-accounts, which makes saving money for your business simple. You can create one sub-account with the cash you need for your payroll expenses. You can create another sub-account with the cash you need to pay your taxes. You can create another sub-account with the cash you need for your rent. And then you can create rules. That way when you have money coming in, it can go towards the different sub-accounts that you need. They connect to a lot of different apps like Shopify, Square, PayPal, and Stripe, and they are very transparent with their pricing. They list all of their fees on one page. That way you know exactly what you're getting. So if you want to learn more and see how North One can help you manage your business's finances, I got the link to where you can do that with North One in the description below. North One is FDIC insured, conditions apply, and Minority Mindset is a paid partner with North One. So if you use them, we will get compensated, but there's no additional cost to you. So if you want to learn more and see how they can help your business's finances, I got the link to where you can do that with North One in the description below. Fifth, let's talk about taxes. You ever see those ads on Facebook or YouTube of those kids that are 23 years old driving around in $200,000 cars saying, hey, if you buy my course, I'll show you how you can live large like me? Well, let me show you some truth about that. I took the example that we had earlier and I just doubled the numbers. So instead of $500,000 of revenue, you have $1 million of revenue. Instead of $175,000 of expenses, $350,000. And instead of a $25,000 salary, you have a $50,000 salary, which leaves your business with a $600,000 profit. The reason I did this is because now the numbers are a little bit rounder, and because a lot of times you hear these people talking about, oh, I had this multiple six-figure business, or I made $1 million in my business last year, and now I can afford this lavish lifestyle. So let me show you how it really works with a $1 million business. If you have a $1 million business like this, where you have $400,000 of expenses a year to run your business, you're gonna want to keep some cash in your bank account to protect you, because you never know when a pandemic's gonna come out of nowhere and slow your business down. And typically a healthy business would want to save something like 6 months worth of expenses in the bank account. So if you have $400,000 a year of expenses, you want to put aside something like $200,000 or so into your savings account just for the business. So this is not $200,000 that you have to invest back into the business. This is just $200,000 of cash savings you want to keep. That way, just in case something happens, you have a savings account for your business. Then you want to take out some money for yourself. That way you have money to spend, because right now you're only making $50,000 a year from your salary, and you want to leave some money in the business. That way you have cash to reinvest back into the business next year. So let's say you only want to pull out $100,000 for all of your hard work of building this $1 million business, which is no easy feat, and that leaves you with $300,000 back into the business to invest, right? Well, we forgot about one thing: taxes. Now, I do need to let you know that although I am an attorney, I am not your attorney, okay? So if you have specific tax questions, talk to a tax professional in your area. Lots of small businesses are LLCs, which is the structure of the business. If you are an LLC, that means your business doesn't pay any business tax. You, as the owner of the business, are going to pay tax on all of the business's profit, even if you don't pull out this money into your own personal bank account. What the IRS sees is how much profit your business makes, and based off of this profit, that's how much tax you have to pay on your personal tax returns. Now, what happens is the IRS is going to look at how much money your business made, and I'm just going to ignore your salary to help you out a little bit here. So the IRS is going to look at this and they're going to say, oh, you had $600,000 of profit in your business? You're going to have to pay us almost half of that in taxes. So now, before you do any of this, you're going to have to send the IRS a check for $250,000. This is your federal taxes and your state taxes. And now you want to save a couple $100,000. That way you have cash to save, because you have $400,000 a year in expenses. You want to pull out $100,000 for yourself, and then you wanted to reinvest $300,000 back into your business. But you can't do that because you just had to send a $250,000 check to the IRS. So now you only have $50,000 left over to reinvest back into the business. So now, when you go on Facebook and you see these YouTube ads of people saying, hey, I made 6 figures in my business last year, or I made $1 million in my business last year, and now I got all these fancy cars, and I'm going on these fancy vacations, and I got this big fancy house, I want you to remember, oh, I know this random guy on YouTube who showed me how it really works, because either these people who are making $1 million, let's just say $1 million in the business, and now they're spending hundreds of thousands of dollars on these lavish lifestyles, either they're lying through their teeth, or they're pulling out all their profit from their business. That way they have no savings in their business, and that way they have no money to reinvest back into their business just so they can flex on these ads. Again, you gotta figure out what your personal goals are now. Is your goal to build this business bigger, or is your goal just to be able to pull out profits as fast as possible? Sixth, you gotta hire smart people, but you also have to hire smartly. We are in a digital age where you don't have to pay for a full-time employee if you don't need it. If you need some design work here and there, but you're not ready to pay the full-time salary of a designer, then you can go onto a website like Upwork or Fiverr, which are freelancing websites, and now you can work with independent contractors called freelancers who are gonna do this design work for you, and you only have to pay them for the work that they do. Plus, with independent contractors and freelancers, you can save money on taxes because now you don't have to pay these people FICA taxes because they're not employees. And finally, number 7, know if and when you need to raise money. Your business can raise money through either debt or equity. If you go and get a loan from the bank, you have to pay this money back plus interest, but the bank doesn't get any ownership in your company. If, that's the key word, if you are certain that you can grow this loan money that you just got, then this is a cheaper way to go, because after you pay the bank back their money plus 5 or 6% interest, then you don't have to pay them anything else. But this is very risky, because if you don't pay the bank back their money, then they can shut your business down. Debt is only something you should consider in your business after you've built and established your business and you have the steady stream of income and you're certain that you can pay this money back plus interest without really any issues, because you don't want to start a business with debt because you don't even know if people are going to buy it, and it's risky because if something doesn't work out, then it can shut your whole business down. The alternative is to sell ownership or equity in your business in exchange for money. Now you're bringing on an investor to help you take your business to the next level, but the tricky thing here is you want to make sure your investors' goals align with your business's goals. Lots of investors want to see businesses they invest in either get acquired or go public, that way the investor can have a big payday by having this exit in the business. If that's not what your goal is, then you're going to have issues and you might get pushed to run your business in a way that you don't want to. The reality is, depending on what your business is and how fast you want to grow, you might need outside capital to help get you there. You just want to make sure you're doing it in a way that's going to help you grow the way you want to grow, in a way that aligns with the business's goals. So the Fed right now is raising interest rates because they want to slow down inflation. So when you raise interest rates, what happens? It's more expensive to buy a home now.
So less people buy.
Less people buy. Less cash enters our economy. Less institutions borrow money. Less corporations borrow money. So borrowing goes down, less dollars enter our economy. The second